Crude oil prices breached $90 per barrel at the end of last week. Elevated crude oil prices could impact economies around the world, stock market returns, and more importantly, you, the consumer. This next report explores what rising crude oil prices mean in the global context. Take a look.
Crude oil prices topped $90 per barrel at the end of the last week, and supply disruptions due to production cuts and geopolitical tensions could take prices as high as $100 per barrel. That could have significant implications on the global economy. Firstly, elevated crude oil prices tend to fuel inflationary pressures across economies. As oil is a fundamental input in various sectors such as transportation, manufacturing and energy production, higher oil prices translate into increased costs for businesses. This often leads to higher prices for consumer goods and services, pushing up overall inflation. Central banks may respond to this by delaying their rate cut timing, potentially impacting economic growth. From an investor's perspective, rising oil prices can impact stock market returns in several ways. Energy stocks typically benefit from higher oil prices as their revenues and profitability increase. Conversely, sectors like airlines, transportation and consumer goods may experience margin pressures due to increased operational costs. Therefore, market indices may exhibit volatility, with investors adjusting their portfolios based on sectoral performances and changing oil dynamics. For consumers, higher crude oil prices directly translate into increased prices at the pump. This means higher costs for commuting, transportation of goods and travel expenses. Moreover, businesses often pass on increased production costs to consumers, leading to higher prices for everyday products. As a result, household budgets may come under strain, with discretionary spending potentially being curtailed. Looking ahead, the trajectory of oil prices will depend on multiple factors, including global supply dynamics, geopolitical tensions, and demand outlook. The possibility of crude oil prices nearing the $100 per barrel mark introduces additional uncertainty, potentially intensifying inflationary pressures and market volatility. Bureau Report, WION World is One.
And for more on this, we're now being joined by Professor Vikas Singh, economist and author, and joining us live from Hyderabad. Welcome to the broadcast, Professor Vikas Singh.
Good morning, Resha. Good morning to all the viewers.
Professor Singh, I want to first start by asking you that why are crude oil prices surging now, and how will it translate into the much expected global rates easing?
It's very clear that the geopolitical situation has contributed to significant rise in the prices of oil and food. It's also now very, very clear that China, which was slowing down over the last couple of years, is now emerging as an economy which is doing much more, is trying to go back to its growth phase. In addition to that, China is also, it is said, though there's no certainty about it, that is creating a reserve pool for about 6 to 9 months for its crude. And that will put further pressure on the price of crude oil. The impact of the Russia and Ukraine war and whatever is happening in the Middle East has only contributed to the rise of crude prices.
Right, Professor Singh, yes, please continue.
Yeah, the impact of rising oil prices on India's economy can be multifaceted, and it will cascade into significant hardship for all households and hurt the economy meaningfully, at least in the short run. While the consumer and the citizens don't need to worry about it for the next couple of months, as the government may not increase the prices during the election phase. However, this may only delay the pain, but it will definitely show up once the election results are out. Most people see the rising crude prices as hitting their budget in the form of higher gas prices and more spending at the petrol pumps. But there is more to it than just that.
Right.
Our study estimates...
Right, just to follow up.
Our study estimates that a $10 rise in crude prices could increase India's inflation by about 15 basis points. Rising fuel prices can affect consumer sentiments and spending patterns. When consumers spend more on fuel, they may have less disposable income for other goods and services, leading to reduced demand. The vicious cycle of inflation, higher interest rate, lower consumption, lower investment, and lower growth will hurt the economy in several ways.
Right, Professor Singh.
Similarly,
Just a follow-up to what you've just said, that will household budgets get stretched again like they did after the Russia-Ukraine war?
It will, but I don't think the government is going to increase the prices of fuel, at least until the elections are over. So for a couple of months, the consumers can breathe easy. But once the election results are out, the government may have no choice but to increase the prices of petrol and diesel, and this will definitely increase to high inflation. Our study says that, as mentioned earlier, a $10 increase in crude prices pushes up the inflation by 15 basis points, hurts the GDP growth by about 0.4%. So people will suffer. It's only that during the election phase, the government may not increase the price, but the hardship will come. It has to, because the government may not have too many other alternatives than to increase the prices of petrol and diesel and LPG.
Right. My last question to Professor Singh: what is your outlook for oil prices in 2024?
It's very, very difficult to predict the price of oil. You know that there are several factors to it. The geopolitical factor is a major reason. Supply chain, which also affects the supply chain. But also, what is another significant factor is where is the economy, where is the global economy going? If other economies start growing, then the price of oil can only go up. Election in about 40, 50 different major economies in the next 9 months will also determine the direction of crude prices. But as I said earlier, it's difficult to predict the price. My best guess is that it will probably hover up between $85 to $110 per barrel in the next month.
Right, Professor Singh, thanks very much for taking our time and joining us here on WION and sharing your insights with us.
Thank you so much for having me here. Have a good day.